I think what changed is that at the beginning, we thought that it was going to be very hard to find companies who want to finance without any subsidies, on a commercial term to go down market. And what we found is that a lot of companies, they didn't know how to do it, but they were eager to try. And so we end up financing about 50 companies so far for $400 million. Small tickets, between $5 to $10 million each of the investments, but helping them not only with finance, but helping them to understand this market. So we could provide market segmentation studies, we could provide run some pilots, very challenging, but to our surprise, they actually wanted to get finance from the IDB to do some of these projects. I think in the future, what I wanted to see more and more are the commercial banks. And within each one of the countries that we operate, the 26 countries that we operate within Latin America, being more active to support these companies. I think at the moment, they are still very hesitant about engaging with companies who want to go down market. So I think we need to see more of them. We need to convince them that this is a good opportunity. And here's an important data point. When we started, we thought that from a risk classification point of view, our projects financed within the initiative that I mentioned would have a much higher risk profile compared to the traditional investments in the private sector of the IDB. To the contrary, what we look today is about 80% of our portfolio has exactly the same risk profile, the more traditional investments in the private sector from the IDB. So what we thought initially, that we're going to be of higher risk kind of approach in order to finance companies with higher social impact, it didn't prove to be true, which is a great surprise because it shows that you can structure deals with a reasonable risk profile and yet have the kind of high social impact that we're looking for.